Hello and welcome to the Elders Insight, an exciting new podcast series presented by Hepworth and Associates, your source for advocacy, advisory, and planning insights for seniors, pre-seniors, and their caring families. So let's get started with the show on location today in Toronto.
Welcome back to another episode of the Elders Insight, and thank you again for joining us here in Toronto, where we are live, and it looks like we are at the beginning of spring. We continue to thank you all for your positive responses that we continue to get on our Elders Insight series. It's a good thing because we love doing it. So let's get on with today's episode, which is entitled Insurance for Long-Term Care. This is a product offering that a lot of people are not aware of, and potentially something that could offset a lot of surprise expenses later on in one's life, specifically healthcare expenses, at a time in one's life is experiencing some true challenges. At many of our seminars and lectures, we hear many stories of those needing some form of long-term care because of chronic illness, accident, or other medical issue that has made it impossible for them to manage day-to-day activities on their own. And whether they're still living at home or they've moved into a specialized care facility, costs can quickly add up. For many of us, these situations are quite a financial surprise, as an assisted living facility, long-term care facility, and or home care can cost thousands of dollars a month. And the government health programs are likely not to cover all or much of these support services that you do need. So these challenges and costs and stressors are exactly what long-term care insurance is all about, but it's not well known here in Canada. So we're going to talk to someone today who's going to tell us much more about long-term care insurance, and his name is Sharma of Taxevity Insurance. So let me tell you a bit about our guest today. Sharma is an insurance actuary. He apprenticed at Metropolitan Life in Ottawa. He developed products at National Life in Toronto, and later supported advisors for Industrial Alliance, primarily here in Ontario. In 2007, started blogging to use his insider insights to help the public improve their insurance literacy. In 2009, he started Taxevity Insurance to help the public directly. He's now an insurance advisor. And in 2018, became a family enterprise advisor to help other family businesses. Bottom line, is a passionate, respected advocate for the needs of older adults. And we are thrilled to have him here today on Elders Insight. Welcome to the Elders Insight.
Thank you for the opportunity to be here, Gary. I appreciate it.
So let's get to it. What is long-term care insurance, and why haven't many people heard about it before? Has it been around for a while?
Too many questions all at once, but let's deal with them. Long-term care insurance provides income benefits to use as you and your family wish when you aren't able to look after yourself. The cause could be a mental incapacity like dementia, which would include Alzheimer's, or it may be that you can't perform 2 or more activities of daily living. That would include things like eating, bathing, dressing, etc. The way the product works, you pick the amount of the benefit. So let's say that's $5,000 a month. These benefits are tax-free, which is good. So that means you're not going to have any impact on your OAS or other government benefits. Since inflation erodes the buying power, you can have the benefits indexed so that they increase in value prior to a claim and also during a claim. One question that people ask is, what happens if I don't have a claim? And that's an ideal situation. What you can have done in that case is get the premiums refunded at death. That means that the cost of the insurance is essentially the after-tax interest you might have earned if you invested the money on your own. And since the death benefit goes to your heirs, you bypass the costs and the delays of the probate process. If the premiums look like they're too high, you can reduce them in a number of different ways. You can shorten your benefit period from lifetime benefits to 2 years of benefits. You can increase the waiting period before benefits start, say from 90 days up to 2 years. And you can also reduce the amount of the benefit. So if you think $8,000 a month tax-free is too much, you can make it $5,000. If that's too much, you can make it $3,000 or $1,000. There's a lot of flexibility. The big challenge is qualifying. And that's because long-term care insurance is so valuable. That means getting it is that much more difficult. And as we age, it gets harder to qualify. And of course, the premiums also grow up. Not grow up, but
go up, yes.
The premiums also go up. There are exclusions for pre-existing conditions, and there are tests of cognitive abilities. So long-term care insurance has been available for years, but not many Canadians know about it. And that's because of various challenges. First of all, there isn't very much demand because too few people, and you would know this, Gary, plan for their aging. And long-term care is part of that planning. And that means that when there is no planning, the family faces a burden at the time of stress. Also, there's not much awareness from advisors because health products are not something that advisors talk much about, whether it's long-term care insurance, disability insurance, or critical illness insurance. Most advisors, it's estimated to be 90%, though I've never seen the source of that statistic, but most advisors focus on life insurance rather than these other products because life insurance is easier to sell and it pays more compensation. Finally, there are few insurers that offer long-term care insurance. Like other businesses, they sell what's profitable. And that means that the onus is really on our audience to be proactive when it comes to long-term care planning.
Okay. It's probably why you don't see a lot of ads on TV about long-term care insurance. So what does long-term care insurance actually cover? And, also what doesn't it cover?
Well, long-term care insurance provides tax-free income when you're unable to look after yourself. And there are different ways you can interpret what that means, and it's important to look at the contract to see how the contract defines that. But there are many situations in which you might need long-term care. For example, someone might have advanced diabetes or severe heart disease. They might have had a severe fall or an accident or a stroke, or Alzheimer's or Parkinson's, or they may need palliative care. Lots of situations arise, and the consequence is that there's a decline in your physical or mental abilities. So you might need help bathing, or dressing, or toileting, or continence, or getting in and out of chairs and bed. So with the benefits, what you get is income, and you can use that whatever way you and your family think makes the most sense. So that could be for care at home, personal service workers, or it could be care in a nursing home. It could be money that's spent on a long-term care facility or extended care or convalescence. There are lots of different options. You also asked what's excluded. Well, long-term care insurance doesn't cover what the contract excludes, which is why it's important to read that. For example, pre-existing conditions would not be covered. And as we get older, there are more of those. And when I say those things aren't covered, it means at the time you apply, the things that you have are not covered. But if you end up having issues that arise after you have the insurance, then those would be covered as the contracts are written.
So I'm not an insurance professional like you, but I do understand that premiums for insurance tend to be driven by risk and age. So how expensive is long-term care insurance? And is there an age where it no longer becomes financially viable?
Mm-hmm. Well, I used to be a product actuary before becoming an advisor. And the way products are priced is they're designed to meet profit goals. It doesn't really matter if the product is long-term care insurance or life insurance. We look at historical claims and we make projections for future claims. Now, you might think that life insurance would be the most expensive product because everyone will die one day, whereas everyone may not need long-term care. But that isn't actually the case. Life insurance tends to be the cheapest product because most people cancel their coverage before they ever have a claim. If
Really?
you look at, yes, that's one of the ways we make money. People think they will have the insurance forever, but we've got statistics saying that people who buy permanent insurance, there's a chance of say 1 in 4, 1 in 3, that within 10 years they will have gotten rid of their product. And if you look at a standard product, term 10, the premiums keep going up every 10 years. So that means each time the premiums go up, there's a chance you'll cancel. And if people don't, then the coverage ends at an age like 80 or 85, and most people are still alive at that point. So life insurance is actually quite inexpensive. In contrast, long-term care insurance looks expensive because it is so valuable. The chances of making a claim are quite high. With the better products to help with the affordability, the premiums are leveled based on your age at the time you apply. And that means the product becomes or remains affordable as you get older. And also the coverage lasts for life, which means that you're protected whether you're 82 or 92 or 102. Now, when you look at life insurance, it costs less for females because they live longer. If you look at long-term care insurance, they pay more because they live longer. So
Ah,
it actually works against females in that sense. So it turns out that females are the ones who need long-term care the most. And the reason is that women tend to be the caregivers. So they have a big toll physically and mentally and financially. And also they're likely to outlive their spouses. So what is available to help take care of them? So if you look at the tax-free income from long-term care insurance, that can make a big difference in maintaining our quality of life in our final years. According to Stats Can, the period of our diminished quality of life is 9 years for men and 14 years for women.
mm. So just confirming, so any benefits you do get are tax-free if you do happen to get the benefit.
Yeah, so the way insurance works is if you pay the premiums with after-tax dollars, the benefit is tax-free. And with long-term care insurance, you pay with after-tax dollars.
Okay, very interesting. So we always like to provide a full range of educational topics on our video casts. And there's always comments about how well the Canadian healthcare system's working. Some things it works well, other things it's got some major challenges, and we all know there's wait lists and periods of time to get to doctors. So you mentioned to me before a product called Priority Healthcare. What can you tell me about that?
That's another one of these products that not many people know about. Priority healthcare insurance is a way to overcome the limitations in our Canadian healthcare. Because our system is publicly funded, the government rations our healthcare. We pay in taxes, but we also pay in waiting. I made an appointment as an aside for a general checkup, and it's going to take me 25 days before I can see my family doctor, let alone a specialist. The Fraser Institute does an annual study of waiting times in Canada, and in 2018, the median waiting time, which means for half the people it was less, half the people it was more, the median waiting time from seeing your family doctor to seeing a specialist is 8.7 weeks, so about 2 months. And then there's another 11 weeks from seeing the specialist to the time your treatment starts. So in total, that works out to be 19.8 weeks. And that's 10.5 weeks longer than it was in 1993. And that's really too long if you've got a medical situation that needs treatment. You want to be waiting months and months. And currently in Canada, there are over 1 million Canadians waiting for care, 2.9% of our population. And you better hope you got the right diagnosis, because if you want a second opinion, that isn't going to be quick or easy. Now, if you look at the US, things are very different there. Getting treatment at renowned hospitals is quick, but it isn't cheap. The US rationing is based on your ability to pay, and
Yes.
that's where priority healthcare insurance fits in. So you're able to get quick second opinions from leading US hospitals in days. You're not waiting weeks or months. You get recommendations for the best facilities for your condition in the US or other countries around the world. You choose the hospital that you want to get the treatment in, and your care coordinator books your treatment, arranges business class travel for you and possibly a companion if you need one, and also arranges for your follow-up treatment. And best of all, the bills get paid by the insurance company. Naturally, there are details and exclusions, and with insurance, as we said earlier, it is important to read the policy contract. I can't use this product just because I can't see my doctor for 25 days. It's not intended for that kind of situation. And again, very few advisors bother to tell anyone that priority healthcare is even available.
So it is available in Canada, so Canadians can purchase it from insurance advisors?
Yes, definitely.
All right, okay, interesting. So if you had a classroom of the us over 50 crowd, so when it comes to insurance these days, what would your top bit of advice be to us? What do you wish more people knew?
Wishes. Well, we allocate ample time to planning our vacations and our home renovations. I wish people would spend more time planning for aging. We're living longer and longer, and you've probably heard stats like this from the Canadian Institute of Actuaries or the Society of Actuaries, that if you've got a couple and each of them is age 65, there's a 50% chance that one of them will live to age 95. So people have generally heard that stat. But there's another one. there's a 90% chance that one of the two in that couple will have a significant health issue like a stroke or dementia before age 95. And with long-term care insurance, the average age at a claim is age 79. Ignoring risks doesn't prevent risks. Preparing for risks brings peace of mind. Insurance may be part of the solution, but only for those who prepare and qualify.
Great. Well, you hit on two of my major themes, planning ahead and peace of mind.
Mm-hmm.
So fascinating chat, Pramod. Big thanks to you on behalf of our listeners and yours truly. I appreciate your objectivity. You were very frank, which was great. Our whole objective here on Elders Insight is to provide the peace of mind that comes from trusted information and advisors like yourself. And it was great getting this advice from someone so seasoned as you.
Yeah, your series provides valuable advice, and thank you so much for providing the kind of information you do, and thanks for the opportunity to be a guest.
Okay, folks, that's a wrap for today's video cast, and we thank you all for joining us. Another big thank you to our guest, Pramod Sharma, for taking the time out of his busy schedule to be with us today. If you'd like to reach out to Pramod and to find folks at Taxevity Insurance, just drop us a line and we'll get you connected right away. Your comments have all been very encouraging. We thank you for many great ideas about future video casts. You're going to keep us very busy. So tell your friends, neighbors, we've got lots of room here. See you next time.
Thanks for joining us today on the Elders Insight. We hope you found this podcast helpful, informative, interesting, and most of all, fun. We hope you can join us for our future podcasts as we continue to be your source for advocacy, advisory, and planning insights for seniors, pre-seniors, and their caring families. A big thanks to Hepworth & Associates team, and we look forward to seeing you the very next time here on the Elders Insight.